This is Alan Bush with the Daily Financial Forecast for Tuesday, August 18th. In the stock index futures, we are seeing prices a little bit lower this morning. Much of this linked to pressure that we did see in the Chinese equity markets overnight. Also, we had the Chinese stock market down by the most in 3 weeks. However, some recovery now after the housing numbers coming in a little bit weaker than expected, namely the building permits numbers showing a 16.3% decline. So this was quite a bit less than expected. The thinking is that with a weak permits number, it suggests that the Fed may have an additional reason to hold off on a Fed funds rate increase. So with that thinking, stock index futures starting to recover, and I would not be surprised to see a move back to higher on the day in the indices. Also, and this is very much a minority view, I think we can see new historical highs in the S&P before the end of the year. This is at a time where many analysts are becoming very bearish, looking at moving averages being somewhat negative and some other factors. But my analysis suggests that there will be a new historical high in the S&P futures before the end of the year. Now, moving over into the foreign currencies, we are seeing the British pound sharply higher this morning. This after inflation numbers in the UK coming in higher than expected. Only a 0.1% increase on an annualized basis, but that was better than the guess of unchanged. Also, we are seeing the Japanese yen a little bit better. This after an aide to the Prime Minister of Japan indicating that Japan's economy needs another stimulus package, possibly totaling as much as $28 billion worth. And the Australian dollar lower, this due to weaker metals prices and a sideways to lower crude oil market. Also, we had the minutes of the recent RBA policy meeting basically coming in as expected, but repeating ideas that the RBA would like to see a weaker currency as their main form of economic stimulus. So that reminder, even though there were no surprises, somewhat of a negative on the Australian dollar. And the dollar index higher, firming a little bit with the weak permits number here in the U.S. And I would not be surprised to see the dollar index moving from higher on the day to lower on the day today. Now, over in the interest rate markets, futures lower across the board, with the long end of the curve basically showing no response whatsoever to the rather bullish housing report, especially the permits number. So that is a sign that we may see a little pressure developing at the long end today. The fact that futures cannot respond to bullish news has to be viewed as at least a sign of short-term weakness. As far as Fed policy, it does look like the Fed may be backing off on a rate increase for the September 16th, 17th meeting. We did have the Empire State Manufacturing Index yesterday coming in very, very weak. In fact, the worst number since 2009. Today, the permits number, also a weak number, both of which are reasons for the Fed to delay a rate increase, which we would totally agree with. Our feeling is the Fed will raise interest rates later rather than sooner. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.